Earn tax-free returns on your working capital. How savvy business owners use max-funded IUL as a working capital account. Get ready. This is going to blow you away. So my name's Doug Andrew, and I've been a financial strategist and retirement planning specialist now for north of 48 years. And I've been very passionate about helping people optimize their assets, minimize taxes, and empower what I call their authentic wealth. Among thousands of people that I've been blessed to help, many of them are business owners. And when I teach them about the merits of max-funded indexed universal life insurance, all of a sudden the light bulbs go on and they go, wow, I want to use this as a working capital account. So let me explain to you why this is an incredible dream solution for working capital for a business owner or even a real estate investor. So here's how money works. When you have your money, your working capital on hand, a lot of business owners, they're so busy running their business that they put the money in a bank or a credit union thinking, well, it's liquid. It's over here. It's safe. Well, what's a bank or credit union giving you? Like less than 1%? That's not very smart just because you want it convenient where you can access the money. So when I introduce them to the max-funded indexed universal life insurance policies, a lot of people don't realize that when you put in the most money into one of these contracts that the IRS allows, and you take the least amount of death benefit that the IRS will let you get away with, which is actually the idea that was originated back in 1980 by E.F. Hutton. And they weren't an insurance company, they were a brokerage firm. The reason why they came up with this is because a lot of people that had money in the market, they had to time it. And business owners don't like to have their money in a volatile market because if it crashes, you don't want to take the money out. It's not liquid. Sometimes you have to wait to be able to sell and what have you. And so E.F. Hutton said, what are we thinking? Why don't we have people put their serious cash, money earmarked for retirement and so forth? It can be long-term goals. But what about short-term goals, like an emergency fund or a working capital slush fund for your business? Why don't we put it in an insurance company? Now, the multi-trillion-dollar insurance industry is not only the backbone of America, but it's the backbone of the world. This is where banks and credit unions put 30 to 40% of their Tier 1 assets for liquidity and safety. So, in the Great Depression, we had banks that closed, 40% never reopened again. Some real estate dropped 80%. But do you know there was not one legal reserve insurance company that went under in the Great Depression? They came through with flying colors, crediting 2, 3, 4%. And when we had our financial crisis in 2008, do you know how many banks went under? Over 400. 900 more were on the watch list, the brink of going under. That's when the federal government asked the 5 major banks in America to disclose where they had their Tier 1 assets for liquidity and safety. Guess where they had their Tier 1 assets? In the multi-trillion-dollar insurance industry, in BOLI, bank-owned life insurance. Corporations have it in COLI, corporate-owned life insurance. This is where I keep my corporate assets. So, if you understand what I'm saying, banks, they pay, let's say, 1% interest. Let's say you have $1 million working capital account to be able to use in your business for emergencies or things that come up or buy inventory, what have you. And you have $1 million sitting in a bank earning 1%. That's $10,000 a year. Do you know what your bank is doing with that $1 million? They're putting some of that into insurance companies earning 4 or 5% or higher. How much more is 5 than 1? Don't say 4. It's 500% more. It's 5 times more. They're paying you $10,000 a year in interest, and they're turning around and making $50,000 a year in interest. But guess what? They're increasing the liquidity and safety because most of these insurance companies are rated 5 or 6 notches higher in safety than the bank is. So that's why I say, let's just bypass the middleman. Let's put your working capital into the insurance companies where the banks put a lot of theirs. And we increase the safety from maybe triple B up to triple A. And so the safety is greater, but the rate of return can be 4 or 5 times. So let's use a few examples of how business owners actually do this. This is called becoming your own banker. So I have several business owners as clients. Back in 2017, many of them who had money deposited in their indexed universal life insurance policies had $1 million, $2 million, or whatever. Let's just use $1 million example. So I had a business owner that needed some capital as an earnest money agreement to tie up a piece of property they were going to fix up and flip and sell. He called me and said, Doug, I need $1 million out of my indexed universal life policy. Send me over that form. It's 1 page. So he puts his name and his policy number, account number, okay? And it asks, would you like to withdraw $1 million or borrow $1 million? Which one do you think he checks? He's savvy. He borrows $1 million. Now, he has 2 choices. He can borrow $1 million because the insurance company has $1 million of his money as collateral, and he can have them charge him 2% because loan proceeds are not taxable income. They charge him 2%, but they credit him 2% on the money he left in the insurance company. That's called a zero-wash loan. But most of our business owners, they will use an index loan. So he said, you can charge me 4 or 5%. Why would you do that? 5% on $1 million is 50 grand a year. It's because now they will credit him on the $1 million of collateral, whatever the index does that year. In 2017, it was 25%. It capped out. Hello, he made $250,000 tax-free on his $1 million as collateral. Minus the $50,000 of interest they charge. He didn't have to write out that check. They just deducted it. He netted 20% or $200,000 tax-free on the $1 million in his policy while he was technically using it in his business that year. And he ended up making another 2 or 3 million using it in his business. That's a working capital account. We have business owners that in 2020, because of the COVID-19 pandemic, in March of 2020, when the market dropped 30%, my son advised a business owner, link to a 1-year point-to-point with no cap. What that meant was, a year later, in March of 2021, the market was up 66.33% from March of 2020. So by doing that, there was no cap. They charge a 5% spread. So he netted 61.33% tax-free. He started out in March of 2020 with $850,000 in his IUL policy. 1 year later, he had $1,382,000, and he locked in that gain. Meaning, if the market crashed after that, he doesn't lose the more than $500,000 he made in that year. That's called lock-in and reset. If this is blowing you away, here's how you can learn more. My most recent best-selling book is called The LASERFund. It's actually 2 books in one. This side is about 200 pages, 14 chapters with all kinds of charts and graphs and explanations for the left brain thinker. If you're more of a right brain learner or thinker, you flip the book over and read this one. This is about 100 pages, 12 chapters with 62 chicken soup for the financial soul stories. If you want to use your whole brain, left brain and right brain, I would recommend you read both of these. I want to gift you a copy, so here's how you can claim your free copy. Simply go to laserfund.com, LASERfund.com, or click on the link below, and you contribute a nominal amount towards the shipping and handling. I'll cover the rest of that, and I will pay for the book. I'll fire out a copy to you. There's also options there to listen and learn, watch and learn. There's even an 18-hour masterclass. And then I want you to check out some of the educational webinars and seminars that we put on. So here is to your brighter future. Go to laserfund.com.